All right, I'm going to start the webinar now, and then we'll hit it off in about 30 seconds or so. Okay, we'll go ahead and get started. Good afternoon, everyone. Welcome to Sidoti's March conference. My name is Daniel Harriman. I'm an analyst here at Sidoti. This afternoon, we're going to hear from RYAM, that's ticker RYAM. We have the company's Senior Vice President and Chief Financial Officer, Marcus Moltner, here to lead us through the presentation for about 20 minutes. After that time, we're going to open it up for Q&A. So if you do have any questions at any time during the presentation, please feel free to type those questions into the Q&A box, and time permitting, we will get to as many as we can. Please join me in welcoming RYAM. And with that, Marcus, I'll hand it over to you. Thank you for being here.
Yeah, thanks, Dan, for the introduction, and good afternoon, everyone. Thank you for joining us. I'll look to socialize a couple slides that'll serve as an introduction to RYAM, and also share some highlights on our key areas of focus for 2025. So you might ask, who is RYAM? Well, we are a well-established company. You can see nearly 100 years of existence. I would say we're definitely the leader in high purity cellulose, which is a natural fiber, a sustainable product, which creates value in a diverse range of products. We also do have a three-ply paperboard franchise with the Polymer brand. That is a FBB product that is well placed vis-a-vis megatrends in the economy. We also have a mechanical pulping operation, which is a high-yield facility in Témiscamingue, Quebec, 290,000 tons of production. Of that capacity, around 70,000 is integrated within that three-ply paperboard product. We're very global as far as an operating footprint. We have 4 world-class facilities, 2 here in the U.S. South, 1 in Georgia and 1 in Florida. We have our operation in Témiscamingue, Canada, and our operation in Tartas, France. So a nice global footprint. And the nice thing with the complement of facilities, we have a lot of redundancy of supply that serves well when we share our value proposition with customers. And lastly, we are really excited about developing our future business, which is biomaterials. And that's focused on renewable biomaterial and energy products that are co-products of our existing production process. So we're really excited about that growth opportunity, and I'll share some of the details with you. Over to the right, you can just see a visual overview of the key operating segments, and I'll get into greater detail on high purity cellulose, paperboard, and high yield in the next couple slides. So maybe on slide 5, you might ask, where do these products end up? What end uses? Well, by this time today already, you've probably used our products in many end use applications. You can think about on the ether side, there's products that lend viscosity. So think of shower products, toothpaste, those type of products that you use every day. We're the largest producer of acetate, which makes its way into filter products, filter tow, plastic applications, LCD screens. Other CS, think of products you can see listed there in automotive, in nitrocellulose applications. These are all end-use product categories that in many instances are growing greater than GDP. So a very nice, stable end-use platform where our products go. Lastly, a couple other areas, viscose and lyocell, that's a textile application. I will call out that that's an area where we've reduced our exposure given the commodity nature of that product. Fluff products make their way into personal hygiene. We have an operation, a line in Jessup, Georgia, a nice little facility, which is well placed for addressing fluff. Again, this is a product that is well placed and is growing. It's a concentrated industry. And then I mentioned biomaterials. We started up our bioethanol plant in France last year. And within our biomaterials business plan, we're looking to grow that as well. Paperboard, again, well placed to benefit and address megatrends in the economy. Think of sustainable packaging replacing plastics. We're also one of the largest lottery ticket producers as far as the substrate that goes into that product. And high-yield pulp, again, I mentioned that again is a product that is partially integrated into our paperboard operation, and then it makes its way into printing and writing and packaging applications. So maybe let's spend some time on the business overview. And we've set out here some information on our top line sales and our EBITDA growth over the continuum of time. And you might notice that this business looks like it has a flat revenue stream, but it's very much explained by our strategy and what we've been working on as far as our mix. Through the period of 2023, where we saw a fair amount of destocking through the COVID time, we had to pivot a lot of our production into more of the commodity products. And you can see that in the visual to the right, where our CS mix went down to 48% as we maintained our production volumes with a higher mix of commodity products. And then with our focus on value over volume through 2024, you can see our mix of CS products increased to about 54% versus that 48%. And we reduced our exposure to viscose. We took the difficult decision to indefinitely suspend our Temiskaming HPC line, which reduced our exposure to viscose. And that, along with a closure that happened late in 2023 on a competitor's plant, really tightened up the supply-demand dynamics for CS, which allowed us to really target that value over volume strategy and drive that 54% change. And what really happened, you can see the growth in EBITDA of around 60% from 139 million in 2023 up to 222 million in 24. And if you can all do the math, that's over 500 basis points of EBITDA margin expansion through that period. And lastly, on this slide, I will share with you, just to put in context, that our revenues are well diversified geographically. You can see a nice mix of product within the US, Europe, and Asia, and an exposure to China, and that's predominantly in the acetate tow market. So maybe let's turn to the next page on our guidance for 2025 and our key initiatives for this year. And if you were listening to our last investor call early in March, we shared an adjusted EBITDA guidance of 215 million to 235 million for the year, and an adjusted free cash flow target of 25 to 45 million. And we also said at the time that sequentially, think of the front end of the year being weaker than the back end of the year. And that was largely driven by the fact that we have 3 of our facilities taking major maintenance downtime in March and April of this year. So that's certainly, when you take those facilities down, will influence the EBITDA by quarter. And seasonally, in addition to that, we have higher energy inputs usually in the first quarter. And at the time when we shared this guidance, we also said that some of the destocking that we were anticipating in acetate would be weighted to quarter one. So we certainly see a strong year, but certainly the low point of the year will be a weaker Q1. But as far as initiatives, we continue to be focused on reducing debt. As you know, we refinanced our capital stack last year. We've got a lot of flexibility now and the runway to focus on execution. But we remain committed to paying down debt through, we have about 20 million of amortization across our lending facilities. So that will continue to draw down debt. But the rest of the pay down will be further along given the terms of those debt agreements. Optimizing our assets is a key area of focus. Again, I mentioned reducing our exposure to commodities, and certainly with the indefinite closure of Temiskaming that I shared, we're focused on maintaining a higher mix of CS, and we're busy requalifying those CS grades that were there in Temiskaming on our other lines. I mentioned the growth through our biomaterials investments. Again, there we're looking to expand that business plan, and we're working on a second bioethanol plant in Fernandina. We've got secured financing for that. We've got an equity contribution and some attractive green loans in France that we'll leverage for this. And lastly, we invested heavily in our IT systems to support enhanced segment reporting this year. And this is all about shining the light on our value proposition by clearly segmenting the biomaterials business and the CS profitability within our portfolio. And lastly, just on the reducing debt, we remain committed to the divestment of the Temiskaming paperboard and high-yield facility. But again, given the tariff environment that we're in right now, that process has definitely slowed down. And again, highlighting the tariff situation, when we set out the adjusted EBITDA guidance of 215 to 235, that was premised on an environment where tariffs would exist for our paperboard operation, and we would look to offset that with mitigation plans. So maybe turning to the next slide, speaking to the tariffs, we've set out here the revenue exposure across our business portfolio for both CS, cellulose commodities, and paperboard. In the CS category, given that we have products that are not substituted easily and have long qualification periods, we feel that tariffs, if there were tariffs, would be passed on to the customer. Again, so we see the risk there lower. On cellulose commodities, because our exposure is reduced with viscose being a smaller part of our portfolio, we largely are active there in fluff, and that fiber is very unique in its fiber properties, is in the US Southeast, and in the end use applications for which it is used, we see a way to again pass on most of the risk on tariffs there as well. So lastly, paperboard is an area you can see a revenue exposure of 175 million. That 25% tariff we shared during our conference call is around a $3.5 million impact before mitigation per month. So it is an item that we're keenly focused on, but we shared our mitigation strategy on that, where we would look to protect Canadian market share via retaliatory tariffs. We would also look to replace US share with further Canadian share. And within the environment now, as the tariffs have been socialized out there, we're certainly in a lower Canadian dollar FX environment where we are benefiting from that, and we'll look to leverage that as well as other business initiatives that we have underway to mitigate that risk further. So I spoke about the tightening supply-demand dynamic within our HPC category and specific to CS. And we've just set out here that the indefinite suspension of Temiskaming and the closure of that competitor's plant in 2023 effectively took around 10% of CS capacity out. And you can see, looking through the planning horizon from 25 to 27, we're getting into the 90s on capacity ratio, which is certainly an area where we can drive price. We shared with you, with our stakeholders during our earnings call, that low single-digit pricing was achieved as part of the negotiations and are reflected in our 2025 operating budget. So that tightened demand and supply situation has really allowed our commercial team to leverage that and drive further pricing and get fair value for our products. So next, I'd like to share some comments on an area that we're really focused on and really excited about, and that is driving further shareholder value by deploying capital on strategic CapEx opportunities. We've set ourselves some very strict hurdle rates. You can see them in the headline here. We're looking at a minimum of a 30% return on equity and projects less than a 2-year payback. And we are very rigorous in our review of these projects and screen them against that hurdle. And here I'll just look to socialize 425 and through our planning horizon some of the highlights on our strategic capital. So I mentioned biomaterials. Of the 39 million that we're looking to deploy in 2025, 16 is earmarked for biomaterials. But as I mentioned, we have an equity sponsor and low green loans to help offset that. So net of financing, a small investment of $1 million. And the balance here is focused on strategic investments, focused on automation and driving further efficiency in our HPC facilities. You can see around 19 million of capital, and we have a stub amount of about 4 million for our ERP project. And then over the planning horizon, we will continue to leverage strategic projects within our CS category at our HPC facilities. You can see a further 33 million of strategic capital with a view to drive some full year EBITDA improvement of 31 million. And I mentioned the further deployment of strategic capital and biomaterials. Net of that financing, a further 70 million to drive around 55 million of EBITDA improvement. And that's on top of projects that we have completed. So you don't have to overlay the French bioethanol plant and some other EBITDA streams within our plants to get to the full year 70 million that we're sharing on the next page. So really excited. Again, these are projects in certainly the automation area that are proven. They're focused on driving down material usage through our facilities and really getting the best chemical and fiber consumption rates through our facility and driving costs down further. And then lastly, just I wanted to share with the audience here the key drivers of driving the higher EBITDA margin and improving the leverage of RYAM. So really, those two items together driving a compelling value proposition. And you can see our ultimate target is 325 million of EBITDA that we shared at our last investor conference, and continuing to improve our EBITDA margins from the 13.6% up to 17%, and continuing our journey on driving leverage down. We're currently at around 2.9 times, 2.7 times on a covenant basis. And we're looking to get below 2.5 times with a continued focus on our CS value over volume strategy, reducing our exposure to commodities further, I mentioned that that 60% reduction from 2023 levels. Biomaterials is a key building block of that EBITDA growth, up to 70 million in 2029. And I mentioned on the strategic capital, really driving further automation and plant efficiencies. So you can see the journey from 10 times leverage to just under 3, with our target to get to 2.5, and really driving our franchise to EBITDA margins that are reflective of a specialty business. So Dan, that was the highlights I wanted to share with the group.
Wonderful. Marcus, thank you so much. We do have some questions that have come in. Again, we've got about 10 minutes, so if you do have more questions, please feel free to type them into the box. Marcus, I wanted to stay on the theme of debt, and just was hoping you could provide a little bit more color to us about kind of the cadence of debt pay down that investors can expect for the foreseeable future, specifically assuming that we don't see a sale of paperboard and high-yield pulp in 2025, and how you might be limited a little bit in your debt pay down based upon the terms of the refinancing.
Yeah, thanks for that question, Dan. So I should have highlighted, last year we paid down over 70 million. I mentioned the amortization of 20 million ongoing. So our current term debt is a $700 million facility. It's anchored on grid pricing. So as our leverage improves, we can below 2.5 times, we can secure another 50 basis points off the floating rate. And so we're currently 700 basis points above the rate. It's non-callable for 1.5 years, and then we can pay down debt. The call premium declines from 102 down to 101, and then par at 3 years. So again, as that window opens up, certainly we based on this business outlook, we would be looking to take advantage of that. And as you mentioned, we do have a special pay down provision for any asset disposition for Temiskaming paperboard and high yield. And again, that's a declining scale of 102, 101, and then par as well. So we secured a lot of flexibility such that we keep that optionality open.
Perfect. And then for investors that are, newer to your story, I kind of want to take things back to the last investor day in October of 23, and just, you laid out at that time the importance of, minimizing the exposure to commodity product, investing in biomaterials, refinancing the upcoming notes, and you've successfully hit on all the major themes of that investor day. So, from your perspective and from the rest of management, could you just maybe update us on what you see as the keys to execution moving forward over the next year or two, specifically as it pertains maybe to the biomaterials investments that, outside investors may not be familiar with at this time?
Yeah, sure. So the next key project on our biomaterials business plan is replicating the bioethanol plant that we constructed in France at the Fernandina site. So that's a key building block, and we're actively working on securing all the permits and securing the final details of any construction there, such that we can execute that project. That is a key project for biomaterials. We're also focused on CTO, crude tall oil, which is another building block. And then prebiotics, we continue to evaluate and stress test that business plan to advance it. And those all coupled together will help achieve, if you remember Investor Day, we set out a target of over 40 million for those projects. Also happy to share that since Investor Day, another key project and building block is the AGE energy investment, which is a 70 megawatt cogen opportunity, which we would do as a partner. But again, that represents an additional opportunity of EBITDA of 30 million. So we're focused on those key projects to help deliver the biomaterials. You asked what else is important to achieving our 325 million. It's continuing to work on driving CS margins further. As we see the muted recovery of ethers continue, we should continue to be able to drive our mix to higher ethers and drive down any commodity we have left at Tartas. That's another key item. The qualification of the Temiskaming grades, we're advancing that well. That's another important item. And even though we said we would consider the divestment of paperboard and high yield, we're still focused on improving that business further, where there's a big opportunity to continue to penetrate packaging grades further there as well. And the strategic projects are important to drive the right operating performance across our operating footprint. That's key as well.
Perfect. And just as a point of clarity, when at the Investor Day, the initial, expectation was, or hope was, that biomaterials would be about 42 million in EBITDA by 27. But now with these new projects, we're looking at a target of 70 million by 29.
By 29, correct. Because I should call out, right, we've got the overlay of the AGE project, but through time, there has been certain projects on the original biomaterials $42 million target that have been delayed by permitting and other execution items as we went forward.
Perfect. And then just a couple more kind of shifting gears. The acetate market is heavily dominated by filter tow into cigarettes, but could you maybe explain to investors what other potential uses there are out there for acetate, besides what's historically been heavily focused on filter tow?
Yeah, sure. So a key other end uses are plastic applications that we sell into. The other high value end use is, think of your tablets, your LCD screens, your iPhones. So all that LCD film application is another one. But certainly within the sustainable mega trends, when you look at the economy, this plastic replacing plastics is important, and also textile application is another emerging area there as well.
Perfect. And then if we look at the presentation deck, as of the end of 2024, you see CS is about 54% of total company revenue. And a question has come in about the long-term target. Do you guys have like an internal or anything that you've expressed to the market in terms of where you'd like to see cellulose specialties as a percentage of total company revenue? And I understand there's a lot of variables in that, should you get rid of paperboard and high-yield pulp, but I guess is there a number out there that you guys are looking at for the foreseeable future?
We haven't shared a specific number, but when you look at the slide we shared on the revenue by product, we would certainly look to pivot further paper pulp and other and viscose sales to CS, right? So there's naturally another 5-7%. You're not going to get it all because you're always going to have some downgrade product when you're producing, but you would look to, if we've got operating capacity on our production lines, you want to make as much CS as possible.
Yeah.
Right. So we've got the line dedicated to fluff, but the other two lines at Jessup and Tartas and Fernandina, we would look to run that capacity all on CS over the long term and continuing to drive that number higher.
Perfect. Well, I think we've reached a good stopping point. Marcus, on behalf of Sidoti and everybody in the audience, thank you so much for your willingness to share RYAM's story. For those of you in the audience, thank you for the participation and the questions. And again, to you both, Marcus, and to Cody, who's behind the scenes, thank you all so much for your time today.
Thanks, Dan. I appreciate you hosting us, and I do appreciate everybody's interest in RYAM. Thank you.
All right. See you soon, everyone. Thank you.